being able to come and join us. Thank you everyone for being able to tune in. We're now on our capital day for the Build Station. So going to be sharing later on today, sit down with VCs, be able to go through your fundraising plans, what it will all be able to look like. And we're now fortunate enough to be joined by a couple founders to share their experiences on how they either raise capital or even just bootstrap their startup forward. We're starting off with Henry, who's the founder of Agridex. So they were able to do a 9 million seed round fairly recently. And so we're able to kind of tap into his bit of knowledge around how that went, true founder experience. So what it was like going through that, being able to speak with investors, raise the funds, grow the team now afterwards, and just being able to continue to push things onwards. So we'll have a bit of a conversation around how his experience was, and then you guys will get a chance to ask some questions if you're here in person. So keep those in mind as we're talking about it. But Henry, why don't you just first tell us a little bit about yourself and a bit about Agridex?
Yeah, sure. So great to meet you all. My name's Henry Duckworth, the founder of Agridex. I started life out in a multi-generational farming family in Zimbabwe, in Southern Africa. And when I moved to England, was promptly hired as a commodities trader and sent back to Africa, to the Congo, to be a cobalt trader. So my experiences were mostly in the emergent world and building companies in the emergent world. And certainly with cobalt in Congo, it's a very, very difficult place to be. You very quickly realize some of the things you can help about commodities trading and some of the things that you can't help. You can't help bad roads, you can't help bad port systems, but you can help settlement functions, and you can help legal contracts. And what that means is, if you're a trader and you're trading commodities in a difficult place, you still have to use the local banking infrastructure, which especially in the poorer and more remote places is incredibly bad, and it's incredibly expensive. And you also still have to send around paper documents. You have to get new legal opinions, all these things that are both expensive and very laborious. So about 4 years ago, I linked up, I moved to London, and I linked up with my co-founder, who was the original investor in DeepMind, which was a big AI group. And him and I were chatting about investments that work and technologies that work. And his big thesis was the technologies that work the best are the ones that attack at scale. And kind of my thesis back was, there's no bigger scale problem than the world of agriculture. There's 193 countries, every single one imports and exports food. Every single person, unless you're in big trouble, eats food and integrates with the world of agriculture multiple times a day. So the problem set is absolutely vast. It means thousands of different currency pairs, hundreds of different legal jurisdictions. And actually, it doesn't need to be that way. If you think about blockchain at its best, it creates unified languages. I think any of us who are building on it understand the power of what that means, whether you're building a gamified experience or a settlement function. It's this idea of a unified and easy a system of exchange. And that can be done on an institutional level. So that's what we set out to do with Agridex. I founded it kind of in 2023. My first 6 months of building was unluckily on a private blockchain. Anyone who's ever tried to do that will know it's a disaster. About 6 months in, I wrote to Solana, Ethereum, all of the big chains. I hope that's not me. No, it's not. I wrote to all of the big chains and was lucky enough to get in front of all of them. And it was actually Solana that we ended up building with, mainly because of Anatoly. He had an incredible vision. He got what we were building. He was very supportive of that narrative, and we started building together. Along that journey, we've had one tiny round at the beginning to stay alive, and then 2 more institutional rounds, the last one being our pre-seed. We've actually not done our seed yet, but the last one being our pre-seed. And in total, that number was just under 9 million that we raised. Very much the story that some of you founders are probably finding today. At the beginning, I was borrowing money from friends to pay rent. I was sleeping on couches. I was eating people out of people's fridges. You know, it was definitely down to that point. And along the journey, I was reaching out to people, even some people maybe in this room who I spoke to when I was raising at the beginning. It's always very, very difficult. You get a lot of knocks. But ultimately, I think if you can believe in the vision of what you're building, and you can tailor your own experiences and the scale of the problem that you're addressing, that's probably where you start to get the most interest in what you're building. And I think it comes down to that. It probably comes down to, why you're building it, what the problem is that it's addressing, and the scale of that problem. But I think we can unpack that a little bit more together right now.
Yeah, no, because what you're talking about here was that if we tap into the funding rounds for a second.
Sure.
So you had your initial one, which was just being able to almost like a little angel round,
Yeah.
where like a few little people would be able to kick off,
Yeah.
and then you started going. So let's talk about that. How did that very first funding come into the business?
Sure. So it was a kind of a beg, borrow, and steal situation. I reached out to the people who I'd made money for in a prior life as a trader and other things. I also reached out to friends and family. I can tell you now we've raised at higher valuations. But when you're desperate, you ask anyone, and it's not always an easy experience. It's not always that great. It's I will tell you right now, out of the 100 investors or whatever that we've had in total, the most difficult two were the ones who came in at the very beginning, who were friends of mine. It's always very difficult rounding up different people, but that was my experience. I chose to kind of do a bootstrap angel round where we raised just under one at 4. And that kicked off the whole dream, but it was also by far the most difficult capital, because when somebody puts in several $1,000s, but they're a young guy with not that much money themselves, you're going to get a lot of telegrams, you're going to get a lot of WhatsApps, you're going to get a lot of unfair questions because people expect instant delivery on something that can take months, or in our case, years to build. So that was the first one that we did.
Well, it's just on that.
Yeah.
What was someone like if you were to look back now and do that same round again?
Yeah. What would I have done differently?
Yeah.
Well, it depends. If you're a UK registered group, I would firmly say look at SEIS. I don't know if you're advising people to do that, but that's an incredibly easy sell, especially if you're a young person who's passionate about the technology that they're building. A lot of people, especially older guys who don't really get tech, if you can get in front of them, they will invest through SEIS, because I think that they see it, because there's the ability to write it off against your taxes, right? I think they see it as a kind of positive gamble in life. They're like, I'll back a type of technology that maybe won't work, but could. But I know that I can take it off against my tax receipts. So I would say SEIS is an incredibly easy win. Yeah. There's lots of different groups that can help you with that. It's definitely worth looking at. We actually only did it bizarrely in our second round. I wish we'd done it on the first, but I was a young guy fresh in from Africa. I didn't know, and now I do. It's such an easy win if you can do that.
And that's just all talking about how if you're a UK tax resident and you're paying your tax, you can then be able to also invest into companies. And I just said you can be able to write that off your taxes being able to do it. It's a UK limited a company that's been set up and you're raising under that UK company. You can be able to register to get EIS or SAIS or EIS approved in order to be able to do that.
I'm not 100% sure of the difference, but I know the SEIS is even more extreme, as in I think the SEIS bit, you get 100% of whatever you invest back against your tax.
Yeah, it's
75%. Okay. So good as. Yeah. So SEIS is the really strong one where, people, as long as they like your story and your narrative, I think are really willing to come in and put some capital, because they know they can net almost all of it off against against their tax liabilities.
Yeah. And once you then done that initial round, you started going.
Yeah.
I'm curious, even what was it like then growing the team from there? From being able to then get to the point that you can now take on the initial capital for the next round.
So I think where I was unlucky in not spending more time in rooms like this is, I think a lot of the best people that you're going to have in the first 2 years is people you're going to meet in situations like this. The 2 or 3 people that I hired through headhunters in the first sort of 2 years, none of them worked. It was always meeting people at conferences or reaching out to people that I'd historically worked with. Because I think when the room's so small, there's less than 10 of you, say, there needs to be not just people's ability, but social cohesion. You want to be around these people because you're with them day to day, and no one can remove you from each other. So I would say that, a big thing for building with us at the beginning was word of mouth, finding the right people through pre-existing networks, whether that was working with the Solana ecosystem or just working with people that I'd worked with historically. But I would say the biggest thing outside of somebody being very good at what they do is social cohesion. You do want everyone to be singing from the same prayer sheet.
No, because that's so important, being able to make sure that team is all working together, especially when earlier on when you're having to work so much. And, especially a startup, you're grabbing around, you're helping out here and there to make sure ends meet and things are being able to push on forward. That cohesion is,
for sure. And I would say, look, I was lucky, but something like 45% to 50% of the money that's been raised in our company has actually been raised by other people in the team. People have come in, they've so believed in the vision. They've said, look, I'll spend my Saturdays going around seeing people. I'll spend a Tuesday evening going to a networking event talking about Agridex. I think if you can really empower the people you're working with early on and make them feel accurately like their founders as well, they'll help you with this legwork. And maybe this is an inappropriate thing to say, but I think as long as you trust them, don't be afraid for them to bring in capital themselves for the venture. That's certainly what I found from the second raise onwards. Is we empowered some team members who believed in the vision and were actively building with us to actually go out and then use their network to bring in certain groups.
No, but that is so important. Your team is out there, especially in the Web3 world. It's very IRL of like industry. Going to these events, getting out there, and you can only be in one place at one time. But if your team are all singing off the same hymn sheet, as you're saying, then they can be able to spread that message and they can be able to push it out there. Did you arm them with any resources? Did you say like, hey guys, here's the deck, here's like a little bit of the elevator pitch.
Yeah.
Like, here's the way to be able to talk to it. This is the funnel. When you do speak to the investor, share them here, introduce me here.
So I mean, you kind of work out. Everyone should be able to speak about it in their own fashion once they're through the door. But I think you do need to have unity in the materials that you're using, and that's incredibly important. Like probably any time that somebody hasn't invested, it's because we didn't have a unified reporting structure on value, on everything that was going on in the company. So if you are sending other people out, or even if somebody in the company is talking about your valuation, how it's going to look, how the investment's coming in, make sure everyone is totally aligned, because if there's a differential, then there's a problem. But yes, you're armed with the same deck. We also have, and apologies to anyone watching this who's a VC who's got this and ignored me, but we have a standard template on our Telegram that just in about five or six lines talks about what we are, who the team is, and then some hyperlinks on each side. People don't have a lot of time. Never get offended if somebody ignores your Telegram. It happens to me the whole time. But have these little imprints. And then at the bottom, we just have three things, which is the deck, the website, and book a time to speak, and those are all embedded underneath. And that's super easy, because what it means is if you meet somebody interesting, especially in the VC space, you can follow up with them. 9 times out of 10, they're too busy, they won't come back, but it does at least mean that you've started to get your materials out there.
Yeah, and that's like, it's just a small little tactic, but as you're saying, it is really helpful to have that little Telegram message that everyone on your team knows about. You've got those key links there in order to make sure that you're singing off the same hymn sheet, you're pushing things out together in order to make sure that everyone in the team is able to help kind of any conversation you had, can create the thread.
Yeah, and use one of those electronic decks that tags who's looking at it. That's the other thing. That's a big mistake that I did in the first one, is we would send around PDFs or PowerPoints, and it doesn't look very professional, but you also don't know who's looking at it. It's been an incredible tool. And not just that, but you can also see how long the person's been looking at each slide. And that for me is the most important thing, because you start to realize what's been compelling, and especially for who. So, let's say you go to, Coinbase Ventures and they spend 0 time on any of the decks, but then they spend 2 minutes on one. You're like, oh, wow, some really serious people have given a lot of time to this particular imprint of what I've said. How do I extrapolate this and expand this through the rest of the deck? It's one of the lessons that we had very early on, is because a lot of the people in our team are quite almost like non-Web3. They're very institutional. I was worried at first that wasn't a sell, and actually it's the opposite. A lot of VCs like having, this highly capable sort of older team deploying some of the commercial asset. And we only realized that because in the deck itself, people kept on hovering around the team. They would go back to it, they would click it 2 or 3 times, they'd go into it. So I would advise getting a product that tracks who's looking at your deck and the times that they're looking at it. And there's several different options out there.
Yeah. Is there a preference that you use?
Yeah. I can't remember what it's called now.
Is it DocuSend?
Yeah, it's DocuSend.
There you go.
Yeah, so that's the one. Sorry, DocuSend. It's really good.
No. And so what then was the transition point? And going from that early stage round into then the next one, I'm curious on the point you realized it was like, actually, okay, we do need to start the round now.
Yeah.
Was there any motivation factor behind investor conversations that was like, how can we invest? And you started having a few of those, and it's like, oh, this makes sense. Was it like a burn thing of like, oh, actually, no, we need to be raising capital?
Yeah.
Now, so how did you know, okay, cool, from that very first round, then going to the second one?
Yeah, it's a really good question. I think don't be led by financial pressures unless it becomes desperate. I think a lot of people who are investing can smell that. Like, don't just raise a round and then go straight back into it. just because you want more money. But I would say identify what you're going to do with the capital and have a real reason and a want for it, and then that's why we went into it because we'd kind of created the bare bones settlement system, and we then needed a meaningful amount of money to get regulated in different countries, and then to build out additional products around it. I probably didn't touch enough on kind of what Agridex is building, but first we started with a settlement function, so using digital technologies to allow people to make institutional payments around the world. The second thing that we sort of added in is credit functions. So going to various debt groups, Obligate, Camino, Casu, groups like that, and allowing them to lend risk capital against groups that are trading, that are importing or exporting products around the world. And now we're going to our seed round because we want to add in things like insurance and tracking. So if you're a trader or an agricultural producer anywhere in the world, you can start going onto the system and getting most of the things that you need, whether that's you need to borrow, whether that's you need lower payment costs, whether that's you need better tracking. Because there's a huge amount of indicators you need to put forward when you're importing goods into Europe and the UK. And so it's amazing, again, for blockchain because it's a great registration points of all of these data that's needed. But anyway, so we're always raising because we're always building more operability and functionality. But the point is we give it a break because you want to have a genuine need set and you want to show the realities, but also the business case. There's no point building something that isn't going to have not just a need set, but a business need.
Yeah, like Andrea, like from A16Z, talks about how you want to be able to raise capital when you want to reduce risk and achieve milestones. And each time you're doing a next funding round, that's what you're doing. You're lowering certain risks and you're achieving these milestones. And so you've been able to position it as a product that you've been able to build. And the new parts are like, hey, then this is the next evolution of Agridex as we continue.
Yeah, he's definitely said it better than me, but I would totally agree with that sentiment.
And how was then like the experience of then when going through and now, okay, cool. We need to build this next part. We need to be able to raise on the funding. And
like what's the experience of just going out to market?
Yeah, and so speaking to investors, was there something that you learned through those conversations, then experiences that then kind of guide you, even then going to the next round that you learned of what you need to do?
Yeah, I think so. It's always incredibly scary. If you're single and you go on dates, you might go on 3 or 4 dates and meet somebody nice. When you're reaching out for money, you can have 50 in a row. Now, I don't know anyone here, but certainly if I was single, I had 50 bad dates with different people in a row, I think I'd go celibate. So it's incredibly difficult. And what's really interesting is a little bit like, you're getting fired at work when people start being nice to you. It's not going well when they're often being very nice with a VC because they're not taking you seriously and they're just trying to get you out the door. But bizarrely, a lot of the times when we've taken money, it's when we've had an incredibly strong grilling. So I would say also don't be afraid to fight your corner. Actually, if you're in the ring fighting for your life, they're taking an interest in you. If they're not taking you seriously, they're mostly just going to be very, very nice and get you out the door. So never be wrong-footed. Often when people are trying to drill into the information, they're not trying to insult you. They're trying to get to a grips with what it is and treat you like an adult. But what that does mean is, especially for us, we had like six or 7 VCs in the last round. So like quite a lot. And from all different continents, one from Australia, Sycamore Gap, which is a new VC out of the UK, Portal Ventures, which is a major one in America. And all of them had a different flavor to how they were interrogating things, but all of them did it in a very, very robust and continuous fashion. It's not like you take one call and they go, yes. People are going to want to drill into who you are, why you're building it. And they're also... I think they'll often want to wrong foot you, not necessarily because they don't believe you, but they want to see how you behave under pressure. So always remember that you should believe in yourself, but also not to lie. That's the other thing.
No, but that's super interesting to hear that. Like the fact that if you're getting grilled, if they're like going at you, it's a good thing because it means that like they're doing a diligence. And if they were just being nice and saying, "Oh, I think that's like them getting you out the door."
Yes,
that's
and don't be afraid. Don't be afraid to sort of slightly crack. Don't have a rehearsed story that you constantly repeat. There's a well-known saying from sort of interrogators, which is somebody's guilty if they have the exact same story and they never break. Because everyone breaks eventually under pressure. It's totally fine to change things around a little bit while you're having discussions, but always fight your case. And also unpack the feedback that they have. I mean, a big thing for us with Agridex is we have a secondary payment system that we've now launched called Loam. And the reason that we've launched it is it's using the exact same technology, but it's now for all commodities trade. Because what we realized by chatting to VCs and just in general is if the technology fits for agriculture, why not open it out to elsewhere? But also it increases the addressable size of your market. And that was another thing that came from feedback. Is I always thought, well, the world of agriculture is big enough, and actually the feedback from some VCs is firstly it's possibly not, but secondly there's enough low hanging fruit using the exact same technology that you have that you can expand out and 10x the size of the market that you're taking hold of, and it's hugely helped. Our volumes are going up now every month. It's massively increased our ability to scale.
And so from some of those feedbacks from VCs,
Yeah.
Was there any other key? So you talk about there the lesson of like the scalability of like actually, you can actually tap into more. Well, were there any other lessons that you took from being able to have all those conversations?
Yeah. I think stand firm on your valuation if you believe it. Don't cut random people deals. What's not said behind the scenes is lots of people want a deal. I guess if you're desperate, give it to them. But people are, everyone's a trader in life, and people are always trying to shave off some value from your discussions. Don't be worried about that. I think the other thing is maybe we're lucky now that we've got to a certain scale where we can not be picky, but we can have fit. But what I would argue is, over time, when you're reaching out to people, start to learn the fit that you have on an investment side. Because at first, go to anyone. I like if you don't have the money and you want to get money in, just go to anyone and everyone. That's what we did. You'll learn over time. But as you go, start to think, well, okay, this group of VCs were clearly negative and had no want to invest in us. This group were more positive, and then start to zero down. If you realize, like with us, we realized lots of different groups that were involved in payment and credit and debt who were VCs had an interest in us. So we started to zero in on those groups. It depends. If you have a gamified experience, start to link into the groups that do that. But at first, cast a wide net, but start to get the feedback of who's excited about what you're building and deploying.
Yeah. And so what was in that journey to find those investors? Was you searching online, looking at portcos? Was it referrals? What was really then helping you drive to get that full list?
all of it. Certainly for me, being founder, Saturdays and Sundays were spent researching. Monday to Friday, you've got to help run the company. So you get very tired very quickly, but you have to remember to carry on building your company whilst also dedicating a monumental amount of time for this. What I would advise is get a list of all of the major VCs and personal investors in Web3, if you're a Web3 product, and start to work out where you can bump into these people, how you can get to them. Because reaching out cold, I found, has never worked. Even now, when I thought some people know who we are, no one replies unless it's something warm, and it's so unfair and it's so depressing if you're a new group and you don't have the same level of agency. But I can tell you that I went through the same thing, and lots of times we reached out to people, they didn't reply, or you get a semi-warm intro, they don't want to talk to you. It's really demoralizing, but you just have to keep going. If you believe in what you believe in, then that has to be enough. And on the reverse, don't be worried about hassling people a bit, because ultimately 99% of them are going to ignore you anyway. May as well push a bit. But do it in an intelligent fashion. If you see somebody in a room who's a VC, don't go straight up to them and pitch them. Find a way around, have a conversation with them, then bring up who you are. It's a little bit mercurial, but it has to be that way. People don't want to be door stopped. And then I guess at the conferences with Solana, with super teams and stuff, that's always a great way, because at least you can help identify who the people in the room are who are of interest, who is cutting checks. I've never been that great with cold approaches in a room. I don't have a sort of Wolf of Wall Street story about that, like sell me this pen. But I think a lot of the time people are interested in talking about what they're passionate about. So sometimes I found that what helps is engaging a VC in what they're interested in investing in. Because then at least, firstly, you get a scope of whether they're going to even care about you. But secondly, it gets them talking about things they're passionate about.
Yeah, it gets them talking about themselves.
Yes. Everyone likes talking about themselves, as you can see with me being here. So you're right. Get people talking about themselves.
It's interesting when you think about like cold outreach just wasn't working, and so you have to do your research on the weekend to tactically find out how can I get in front of them. What events are they going to be at? Who do I know who can introduce me? You know, how comfortable was you asking for many introductions into VCs and stuff like that? Like, was that a comfortable experience? Or like, what lessons did you get from that?
I was, and again, apologies anyone watching this if you're one of the people I did this with, but certainly like you know, if I knew somebody who was a VC or even like a junior person in VC, I'd be inviting them out for a drink or a game of tennis or whatever, and it's like it's a little bit impure because you're obviously trying to get to the next stage. But I found trying to be incredibly sociable was a way to get in front of certain groups. You know, don't be afraid to offer help as well. You know, offer help. Like there's a lot of junior analysts in VCs. They're as shy as you might be. Like they don't know as many people around. So if you're a more junior person in an early raise, make friends with one of them, get their insights. Maybe they have some people you want to speak to. I think if you're still a little bit green fingered, maybe it isn't the best thing to go up to the owner of the world's biggest VC and pitch yourself. Find one of their more junior employees. You know, find a commonality and a bond with them and then start to scale up your experiences. Yeah.
And when you're doing all this research now, you're trying to plan out, you're mapping out who's going to be a person to speak to, where to go. I think it'll be the interesting point that you mentioned before was like you still have to run your business when you're doing this monumental challenge of raising the capital.
Yeah.
Was there any experiences or lessons that you took away from like how to balance that and where to understand your priorities when you're in those periods where you need to raise the capital?
I think we were very reliant. I've got a really great chief strategy officer, Ed Monkton, and he's a very, very good person at picking up a lot of the slack when I was off, because everyone, when you're raising, I don't know when it stops. I hope maybe one day it does, but when you're raising, everyone wants to speak to the founder. No one's gonna invest without speaking to the founder. They want multiple calls with you. It's their money. They want you to dance for them, you know. So, and that is a distraction. So I would advise is the second you can afford it, or even if you can't, give them equity, but get somebody in that you trust to be able to handle some of the responsibilities that you won't be able to cover the whole time. Because if it's at all worth it, especially early on, you yourself as a founder will have 3 to 4 meetings with these VCs, either in person or on the phone. You know, if you're doing like we did, I probably 100 first calls in each round. You know, that really starts to show you the number in time. That's 100 times 30 minutes. These numbers really, really start to pack out. You talked to me about Ethereum, an idea. Like I said, I got the list of I think there's something like 500 or 600 major investors, VCs and personnel in Web3 that I got a list of. And then I just started cross-referencing against how I could get in front of each one of these people. Were they going to be at the same conferences as me? And also, like I said, look at their junior teams. Look at who the analysts are there. Don't go up to the main person. So which analyst is going to be at which event? How can I get in front of them? And then you start to scratch off whether you've seen them, how you've seen them, what they know about the group. It's, you know, it's like a detective series. You've got to really get in front of the right person.
And how long have those rounds taken you? You know, when you're having to do those like 100 calls, 30 minutes each, you know, in what time period do you usually find that happening in?
So for example, we've just opened up our next round. We would want to close it within a month, but that's because of getting to a certain scale. We've already had the offer of a lead and a couple more people who've agreed to come in, which is great. I think the larger you get, the more speed matters. But at first, I think, especially if it's your very first round, it's going to be open until it closes. So I think be more realistic on value, be realistic on what you can raise. And a great language to use is, let's say you need to raise £100,000. Don't say I need £100,000. Say we're raising up to 50, and you can always increase the amount afterwards. I would say in the very first instance, don't go for a number that's unachievable. You can always pad it out. And actually, some people in a first round like to hear that you've raised more capital than you'd originally designed to do. What often can be a drawback, though, is ringing up those same people and saying, well, we're not even close to what we said we would raise. People are happy for it to increase the value. They're a little bit more reticent for you to raise a lower amount than you said.
Interesting. Yeah. Is that
and then I would say, okay, so our first round took like 6 months. Our second round was 3 months, and then the last one was 2 months. And this one I hope is going to be much quicker. So it gets smaller over time, but that's because we've had more and more market fit. There's real revenues, there's profitability. So it becomes easier because there's basic questions that I can answer now that I couldn't answer A year ago.
It's no longer an idea.
Yeah, it's no longer vision and the size of the market. It's like what's being deployed and how is it working.
Yeah. And if we then talk about like the cap table for a minute and like how you broke that down and how you, even when you started having these conversations to organize that, what experiences did you kind of like take away from, whether it's how to close that official lead investor, how to fit angels into the picture, like how was you then designing the cap table?
Yeah. So for us, it was lumpy at first because we had lots of small groups coming in. So I wouldn't say that our cap table is a thing of beauty. It's on Companies House, so anyone can see it. It's quite a lot of names on it, and it is quite lumpy. But what I would say is now the top 10 shareholders hold like 70 or 80% of the business. So it's pretty clean now, but there is lots of small names that we brought in the beginning. I don't know what that looks like to bigger VCs who are looking at investing us now. I honestly don't have a read back on that. I should probably check, but never be afraid to give away more equity than you're comfortable with would be my experience. I only own 20% of Agridex now, which probably isn't much for some people, but I was really, really happy to give up equity to be able to grow a business that I really cared about. My other founder has about the same amount. So, between us, we own less than 50% of the business already, but we've managed to raise money. We've built some amazing products. We've got offices in 3 different continents now. It's really growing and it's really exciting. And it's much, much better in my mind to have that and even have just 10%, because ultimately, unless you're a highly avaricious person, this should be about building something that you really care about. And that should be the thesis. The money will come later. That's my experience. But some people have the ability to bootstrap it with nothing, and I salute them, but that wasn't my experience.
And I guess that will be an interesting thing just to talk about there for a second about, like, why did you even start Agridex? Like, what was that point? Because I think that's a lot of things when you're speaking to investors and they're wanting to get that why factor behind it.
Yeah, sure. So I grew up in Zimbabwe, and in the early 2000s, when I was a child, they had a land reformation. A lot of people got killed, and it went into mass starvation. It was one of the fastest economic regressions in human history. So I saw firsthand mass starvation on the streets. Some of my friends were killed. It was a really horrifying time. It's not something I normally talk about, but that was the truth of it. So I saw what happened. Food for most people in the emergent world is something that you get from supermarkets. That wasn't my experience. A lot of my friends were farmers, and I saw what happens when food supply stopped. So I knew that I always wanted to spend a portion of my life doing something to help in the world of food supply. I spent my 20s as a trader and in hedge funds trying to make money. And then I just got to this point where I was like, well, now I want to do something effectual and meaningful. And the great thing about what we're striving to do in Agridex is, whether it becomes the biggest company in the world doing what it does or not, it's already pushing the needle of positivity in the production of agriculture. Because a lot of people don't realize as well, like, access is such a huge problem. For most producers in the emergent world. Most people pay exorbitant fees, and the profitability they get is incredibly low. But if you think about it, the human population is growing massively, especially in Africa, where I'm from. 1 in 4 births going forwards in perpetuity are going to come from Africa. So somebody needs to create a mechanism for allowing fairer trade and produce from that region. So that was kind of the...
No, but it's important for that why has to come from the heart,
Yeah.
Like, because then that's what really allows you, is when you're building your business, to like push through the hard times. When you're saying, even when you're fundraising, those weekends go into it, as well as in the Monday to Friday having to run the business, that all then helps make it possible.
Yeah, for sure. And I think the joy of building something that you believe in is, do try to remember that it's supposed to be fun at times. Like, it's not just supposed to be a grind. I think sometimes it'll feel like that, especially, as I said, when you're on your 100th call and you feel like everyone's a no. Do remember that you're building it either for a reason of passion or a reason of joy. And I think hold on to that 100%, because it's not easy. It's not easy out there. And I don't think I've ever spoken to a founder who says that their raising experience was easy. It's not. And it's not supposed to be, because there are lots of other people around with probably great ideas, and you're coming up against them as well. You're not just coming up against yourself and your own insecurities.
No, very true, very true. And so why don't we take it to the audience? Who has some questions for Henry about their experience and any type of advice that they could be able to take? Who wants to go first?
Okay. Well,
Thank you. I have a question. You said that you had how many calls with the investors before you raised your last round?
So in the last round, somewhere between 100 and 150 first phone calls, and then I would say on average before somebody invested, a minimum of sort of 4 calls and information back and forth. One group, Sycamore Gap, I'm sure they won't mind. They're very strenuous with their DD. Probably did like 10 or 12 different calls, meetings, drilling into the numbers. So it takes a long time. But on the reverse, it's their money. Like they have to be careful with it. So I would say, 100 to 150 first calls, and then on average to close between, 4 to 10.
All of them warm introductions, or
No, not all warm from me, but some from the rest of my team. None of them were totally cold. I reached out to the ecosystem. Nothing. I don't think I've ever had a call where I reached out on their website. And I tried early on, but I don't think I've ever had a return message from somebody that I just messaged from their website, which is annoying. But you wonder why they have those contact details on those websites. But I've never had a reply. I guess with modern AI and everything that's going on, they probably just get totally botted now.
Anyone has a question?
Henry, so good to hear you out, man.
Hello.
So you said you raised 9 million recently, nearly 9 million, which is amazing. Do you now suddenly feel the pressure to grow as quickly as possible, or are you trying to still remain lean and think like a startup?
Yeah, no, it's a really, really good question. Yeah, the pressure never goes away. And I think especially as like the journey's been going on for like almost 3 years now. So you'll still feel pressure from your early angels who invested when it was like a couple of million in valuation. And they're going, well, hang on, it's worth this much on paper. When can I get some money back? Like all of those problems exist from your early stage investors, which is always a nightmare. But secondly, the bigger you get, the more likely somebody is to make an offer for you. A big thing for us is because we're one of the only digital settlement systems in a lot of verticals. So a lot of like emergent countries that don't, like everyone talks about how somewhere like Nigeria or Kenya, everyone has a wallet and everyone has cryptocurrency. But what they don't say, which is the truth, is almost all major banking rails are still historic legacy banking infrastructure. So you may have 30% permeation of crypto in Nigeria, but mass institutional payments is still very, very low. Same thing in Kenya, Zimbabwe, Zambia, etc. So we're very much like a tip of the spear in terms of like groups that are coming in and building genuine institutional transactionality in those regions. And what that means is somebody like a Tether or a Circle, we've got a Circle Mintacap, but one of those guys might then buy you just to deploy their asset. So suddenly you have this very odd thing of like, I've built this thing, you could sell out tomorrow at a certain level, and then you give up on your dream. So that's a pressure point as well, 100%. And then the final thing is you have to build in real reporting structures. And that's the thing that you need to get ahead of as soon as you get to a certain size. It's no longer just like me and three girls and guys around a table with our laptops, like, and a dream. Like now you've got to manage people in different continents. You've got to building reporting structures, and that can be quite difficult. And I would say that's when you need to rely on a great COO or CSO to help you with that vision.
Hi there.
Hello.
I've got a question regarding investors, VCs, and other companies that are in their portfolio. Would you say it's a tactic, or how do you go about finding opportunity with companies that are in their portfolio?
And that it could technically either be a rival or do something similar. Is that what you're saying?
More of an opportunity of a partnership, something that you can offer, and how that would help from
so they've invested in something, they've invested in a group that you feel you can create value for with your group.
Yeah,
I mean, I think that would be amazing. I guess be careful about giving up any IP that they could just then use themselves. But I would see that as a great route. I think that's an ideal way to reach out.
Great talk. The thing I want to ask is more about regulation. And
yes.
I think you dealt with multiple countries, multiple emerging countries. In terms of the regulation side of things and all the regulators, all those sort of countries, How big of a headache was that? And
It's
stuff like
it's
that?
98% of my headache.
Oh, really?
Yeah. It's everything.
Ooh.
Absolutely everything. I thought before I went into this, I was like, I'll build a company, I'll raise some money, I'll get some interesting people in. Like those will be the pressure points. It's regulation. It's like that's everything.
Like
And I think in some countries, like okay, so we've had to be really, really interesting with how we did things. I don't know if I should say this on camera, but like Zambia, for example, has no digital sandbox. So I reached out to the Zambian Minister of Agriculture, who's a farmer, and I said, can I show you Agridex? Can I come to your office? And so I arrived with a film crew, got him to use Agridex, and now we're in the digital sandbox there. You know, you've got to think eruditely. Like we're doing the same kind of thing in one of the other African countries. I can't say which one, but they want to create a digital stablecoin now. We're like going to talk to them about that. I think be very proactive. But it's a constant nightmare, regulation. But on the reverse, there's a fairness to that, right? Like the most closeted industries in the world tend to be either control of land or control of financial flows, right? You know, in any country, every country in the world is corrupt in a different way, and that corruption always permeates down into who controls the land and who controls the financial flows. And with what we're all doing in blockchain, it's often disrupting the financial flows aspect. So of course you're going to be, it's like swimming against the sea. There's constant crashing waves against you. So it's 98% of my problems. We have a good in-house lawyer, and then we have to get in front of stuff. But that's why, despite the fact we've been around for 2 years, our volumes are only reasonably good and real now, because like it's been led by 9 months of like, you know, pushing back against different regulations, getting regulated in local places, paying money for that, you know, as in like paying money to get local regulation done. So yeah, it's a huge problem for us. But it's also an opportunity to learn about how you can ameliorate your business, but also like what maybe you can teach them. Because some of these countries are not hostile to be negative. They're hostile because they don't understand the infrastructure themselves. Like, I don't know if any of you ever speak to your parents about blockchain, but some of them will just, like, they still don't get it. And you've got to imagine that those same people are in charge in countries that have not come across this before. So you've got to be proactive.
Thank you. That was great.
Awesome. Okay, cool. Well, can we again give him a nice big round of applause to Henry?
Thank you.
Thank you for joining us, good sir.
Thanks very much.
That was very good. Awesome. Sweet. So we've now got a workshop that we'll be going to afterwards. So we don't have time for you because there's going to be another one now. So this is going to be about your capital fundraising from Draco Ventures. So that'll be in the Hive. So you can be able to go learn from there about what is the next stage for your fundraising journey. And anyone watching, you'll have to weep because you won't be there.